Hello, today is the 9th of August. Time to post the report. It's going to be an end of week report, and actually, um, this week was quite busy, but in the end, it is the best time to post this report because in the middle of the week, when I always most of the time uh, try to post these reports was not that informative. And right now we are sort of at inflection point. And what do we see here? We see the initial gap down, and we see how the index and the indexes and most of the index names, with rare exceptions, are trying to climb back. But the problem is that they are climbing back into resistance, into some moving averages. For example, we just saw QQQ, which was maybe the most weak of them all, and it isn't even near the 50-day moving average. It is sort of getting resistance on top of this previous consolidation and also the downtrending 10-day exponential moving average. DIA in this extent is more resilient. It is above it is close to 50-day moving average, but also it is facing a congestion of 50, 10, and 20 day moving averages of them. The 10-day and the 20-day are exponential. And in SPY, the situation in S&P is similar to QQQ. Yes, right. It is a bit weaker. So here are the closest psychological lows that could or should be undercut in order to create the necessary psychological conditions to trigger mass liquidations of retail positions, the so-called dumb money. Why? Because personally, I think that the sentiment, we saw the sentiment data during the middle of the week. It corrected a bit, but it's still too high. There are too many opportunistic, unqualified investors in this market, and they still tend to create volatility around buy points, and they still tend to run the prices up every once in a while. And we are still not in the condition where it is when the mood really turns bad or even better, something like apocalyptic, and this is the end of the market, of the economy, and stuff like that. We are not there yet. But if we take a look at the volatility, this peak was very significant. It was a bit like the COVID levels. Very substantial increase, one of the highest. This is a serious consideration in favor, actually, of the market bottoming here, at least temporarily, or maybe even these could be the bottom, given this spike in volatility. In this case, I would expect some sort of consolidation here, but the most important thing right now to take into consideration is individual stock setups. Since the picture at the level of indexes does not provide a clear understanding of what's happening and the index is weak, the only reliable display of institutional activity in the broad market, especially given the fact that we are considering rotation from mega caps like Nvidia. Actually deleted that one from my watch list. To small caps, which are being represented by IWM and MDY. This is the MDY, and this is the IWM. If this theme is about to persist, given that we are nearing the point when the presidential cycle in the States should resolve itself and provide a market with the long-awaited clarity, and if at the same time Federal Reserve will be able to cut rates, these indeed could provide the necessary financial conditions for investment in small and middle-sized enterprises. And as always, market is supposed to start discounting this in advance. And ideally, names which should represent this theme should display relative strength right now. And basically, for example, Atmos Filtration Technologies is quite representative in this regard. Maybe something special is happening there, of course, and this stock is playing a game of its own here, but this is quite good. It's holding quite good. Of course, it is a bit volatile about around the breakout point, but it's okay. And no signs of capitulation here. No signs of trying to return into consolidation. At best, on higher volume. Not totally unlike it was in the days and weeks before the breakdown, which happened on this Monday. Holding good so far. I will just cycle through the names to show you what's in my watch list. Another noticeable theme in this market is pharma. These stocks they do not lead the market at the moment, but they are definitely showing some resilience. And another potential vehicle to execute this theme could be Cure, which I like a lot. 3x leveraged ETF, and IBB as well, because this is holding well. This is holding way better than the indexes which were reviewed earlier. So pharma was good and it is still good. Some additional examples of resilience in this market. There are stocks that are bucking this volatility. One of them I was surprised to see actually never triggered the real buy point. Maybe you could buy today on top of that inside day that potentially could lower the risk a bit to 4.5%. But once again, the main challenge in this market is to avoid trading, in my opinion, to avoid it altogether, because just to take a quick look back at the indices, given the level of tensions, we could easily wake up on Monday to a new gap down, because given today's state of international affairs and especially the military tensions all around the world and social and political instability at large, 2 days with closed markets could bring us anything in any region of this planet right now. So I wouldn't be that surprised if on Monday something else happens and we gap down a bit more and indeed try to undercut one of these aforementioned levels. And if they will not hold, there are more here, but this will be quite severe. So anyway, back to the stocks. What else is holding well? Carvana is holding well and even shows some signs of accumulation. Another pharma name, Dianthus Therapeutics, Chinese name. eBay surprised me. Yeah, it really surprised me. So Evolus, Evercode. This one behaves how stocks are supposed to behave in this kind of market. Badly perceived earnings report and subsequent capitulation on huge volume. This is institutional liquidation right there. So another example of a resilient name is Extra Space Storage. GoDaddy just ignoring these market conditions, continuing to grow, but unfortunately without a proper buy point. This is the point around the earnings. If we put earnings aside, this could be this could have evolved in a proper buy point, but it is an earning situation, so just going to the upside. There are some more names. This one actually I don't like that well because it's a military company, defense stock, and it is showing relative strength, just like the Lockheed Martin. And we know well that situations like this, they tend to happen before some major military conflicts occur. So that's why I'm so concerned about this market. Long-term military conflicts are good for the stock market, but short-term it could create additional wave of volatility, trigger more stops, and bring some names underwater. And there are no guarantees that in the new cycle they are going to recover with the market or ahead of it. So right now the most important thing, DoorDash is holding very well. The earnings are perceived quite well here, and these are the new names I found today. Utilities are strong, which is another sign of flight to safety, and all the rest is quite messy, to be honest. Wow, this is great. This is a new name, and today it just got destroyed on earnings. So yeah, nothing to report in terms of actual buy points. And as I've said, the most important thing is to see how it closes today. At the moment of this video being recorded, we still have around 3 hours till the market close. And how will it resolve itself? I don't know. But even if it closes strong, that means in the upper part of the trading range, it still could very well go to the downside on Monday, because these draining volume, this is not a good sign. Institutions are not too eager to buy into this weekend, so that's why there are no buy points at the level of individual stocks. So cautiousness and capital preservation are undisputed priorities for now. Take care.